For today's session, we have two very experts in their field. Some of you may have heard them before also. So this is another section on financial planning. So as you know, the topic is behavioral aspects in finance and investing. So on behalf of AMA, I welcome Mr. Saumitra Trivedi and Mr. Vatsal Shah. You can. So most of you know already what AMA is. Our main purpose at AMA is knowledge sharing, and a lot of courses and other talks and lectures happen here on an ongoing basis. Quickly, I will run you through, some of you may already know, but still for many who may not have heard, just a short profile of both our speakers. So Mr. Saumitra Trivedi, he is an experienced financial expert, and he is a certified financial planner with over 24 years of experience. He has been, serving with corporates, high net worth individuals, professional investors, and he is an empaneled trainer with the National Institute of Securities Market Education Initiative by SEBI, and he conducts continuous professional education programs for mutual fund distributors. And of course, he conducts regular investment programs focusing on financial planning, retirement planning, and mutual funds. Our second speaker is Mr. Vatsal Shah. He is a founder of Anantaya Financial Services. He is also an experienced financial advisor with a track record of managing ultra high net worth, family offices, and to create wealth through strategic investment. And he has previously worked in Deloitte India and Sistera India. He is an MBA and BTech from NMIMS Bombay, and has represented India at Harvard Project for Asian and International Relations in Tokyo and Boston. So, on behalf of AMA, I would just like to felicitate both our speakers. Mr. Vatsal Shah. So we'll start. So just to briefly tell you, we will have Mr. Saumitra will speak for around 30 minutes, and followed by Vatsal Shah, and then we'll have around 10 minutes time for question answer. So yeah, you want to speak? Okay. So Mr. Vatsal Shah will start. Uh,
Good evening, ladies and gentlemen. Good evening. Yeah. So, firstly, I would like to thank AMA for inviting and providing me with this opportunity to be here in front of you guys. And, we shall speak today on the most important, critical, yet it is one of the most underrated topic in finance, which has not been given as much of value which it should have or should be given, which is behavioral finance. Because 95% of the wealth is created from here and not because of somebody or what you do. It's about what you think is what creates wealth, right? So it is a very gray area and untouched. So we'll touch upon topics which have been very different, but we'll bridge the gap between those topics in theory and in practical examples. So what you can see in this graph ideally is uh, since decades, since 1940, if you see, uh, the average holding period for equities, back in those days, there were no mutual funds. So, if we talk about equities, since 1940, the average holding period of stocks was as good as 7 years. Today, in 2010, that the data which was available, that has been dropped to less than 6 months, the average holding period for stocks in a portfolio. As per 2024, the data suggests in India that 5 days is the average holding period in an average Indian equity portfolio. 5 days. So just take a pause and think, is it investing or is it speculating? So this answers a lot of questions. Just ask yourself, investing in a particular business for 5 days on an average, it's like you are running a business and somebody gives you a check and asks you after a week, bhai ketlu return madyu? So isn't it, hilarious? So same thing is what data is showing. So I would urge that everybody should treat capital markets as a place where it's a business, you are investing in a business, right? And a proper business cycle from its crest to trough, which is from the top to bottom, is approximately 7 years. Which means that if you take a iron manufacturer, steel manufacturer, a automobile company, any company or a pharmaceutical company, even the best companies have a lull period because they all go through business cycles. So you should treat a minimum, by investing in a company, a minimum of 7 years as a gestation period. Otherwise, stay out of equity, or maybe debt, or a blend of debt and equity is a better option. So this particular presentation today will be more focused towards equity and as a business rather than debt oriented products, because debt mein to there are manufacturers and you need to buy, there's no value addition as much, but in equity and equity related products there is a lot of value addition. That's why. We'll touch upon a few topics, like what should be done and what not should be done as far as decision making is concerned, right? So on the left side of the picture, what you see is 4 simple aspects. One is self-deception as a part of decision making error. What is self-deception? It is basically the limit to learning, the ability to learn by yourself, saying to yourself that mane badu avde chhe, I know everything, right? So that comes under, you are decepting yourself, and that is being a point of inflection which is not making you grow for taking appropriate investment decisions. Second is heuristic simplification. What is that? It is basically nothing but shortcut to simplify the assessment of possibilities in decision making. Basically, it's like in your cognitive ability for zeroing down upon a particular investment decision, you say that, because of some complexity, you assume that no, this variable is okay, and let me just pass on those variables, and not give proper attention to those variables and assume certain variables. So that hypothesis is, just to simplify it itself, is a mistake, right? The third is emotions, your mood. Financial decision making should never be when you are too happy or when you are too depressed, because most of the time it will urge into an error. And lastly, social influence. What everybody would incur, right? In the morning, my friend is saying that I should invest here in this IPO, in this QIP, in this fund, whatever, etc., etc. So that is nothing but that causes to an effect which is on the right side of the slide, which is nothing but herd mentality. Right? What does herd mentality basically being a copycat? उसने किया तो मैंने किया. Right? So that is these are few basic concepts where we can identify that errors can be made the most and we should overcome those errors. Now we go to a very interesting concept which is by Daniel Kahneman. He is a Nobel Prize winner who has written two great books. We won't talk about his second book, Noise, but we'll talk more about his book called Thinking Fast and Slow, because that is a award-winning book on behavioral finance and investor psychology. What he has to say is that there are two types of thinking. One is a level 1 thinking and one is a level 2 thinking. A system 1 or system 2, basically. A level 1 thinking is nothing but is good in judging people, is good for repetitive tasks and for finding patterns. For example, you would say that after COVID, the markets have only risen. So if market છેલ્લા 2.5 વર્ષમાં વધ્યું તો આવતા 2.5 વર્ષમાં પણ એ વધવાનું જ છે as a straight line graph. But you cannot extrapolate the same on basis of historical past data, right? So basically this entire thought process comes under system 1 level 1 thinking, while level 2 system 2 thinking is thinking on the basis of data points rationally. It's like remember that you need to take investment decisions not on just your impulse and level 1 decision making, but on level 2 decision making, which is completely based on data and facts. For example, tell me how much difference did it make if Trump got elected or not? How much difference did it make if RBI governor is replaced or not? It will make a difference on the next day, but not in 1, say 2, 3 months or even in the foreseeable future to the capital markets or to the any company's balance sheets, right? So what system 2 thinking will overcome is two things. One is overconfidence bias. Overconfidence bias it eliminates the risk of wrong investing, excessive trading and suboptimal market timing, right? And the second thing which it will overcome is your emotional overload. Basically paying less attention to your short-term fluctuations and paying more attention to what your long-term needs and goals are, and to focus on that and bridge the gap between what exactly your requirement is and what exactly your goals are. Okay, so now I would like to have this session to be a little interactive. Can you just raise the hand who invests in capital markets directly? Okay, and how many of them of you guys maintain a portfolio online? Say through any broking apps or through money control or such like that, right? So why do you do that? So okay, so in the first place, if you know what you're buying and what you're holding, then you do not need to track it day in and day out. Do you check the price of your house every day, every week, every month or every 6 months? No, right? Then why do you check the price of your stock? Simple. If you know that you're buying the right thing, then you need to check कि बैलेंस शीट में कितना प्रॉफिट आया, कैश फ्लो में कितना आया, ऑपरेटिंग कैश फ्लो में, इन्वेस्टिंग कैश फ्लो में, फाइनेंसिंग कैश फ्लो में, not the stock price, right? So this basically is the concept of neuroscience in investment decision making. It is basically how things are thrown to you and you are addicted to what is being thrown, and it is thrown by 4 channels. Digital media, Instagram पे reel आई, how to create a 5 crore corpus. They seem to be heroes and financial wizards, but do you actually know that he has created a 5 crore corpus? No, right? Then if there is no legitimaity, then why to just trust such Instagram reels and etc. What you see on digital media. Similarly to news channels and newspapers. Actually, this is a medium to propagate for TRP and it's a paid content. They don't know कि Mr. X को क्या चाहिए for financial independence and आपका goal क्या है, right? So I don't think that it should be a good idea to invest कि हाँ economic times wealth में ET wealth में there are 3 stocks as a great buy. Target 18% upside. Wow, I should buy it. No, that is not the way to buy it. Invest. And the fourth is influence through social circles. Because today NFO, IPO, जिसको 7 करोड़ 10 करोड़ का फंडिंग चाहिए उसको 7,000 करोड़ का फंडिंग मिलता है 1000x. इट्स मैडनिंग. इट्स लाइक लॉटरी टिकट. किसने नहीं किया? तूने नहीं किया, मैं रह गया, तुझे मिल गया वैसा. So that is not the way you should invest. You should be very rational and sensible as an investor. Treat capital markets as investment friendly and rational decision making. You will create a lot of wealth. By the way, do you know who owns money control? How does it own? How does Reliance own? Correct. So money control is owned by Network 18. Network 18 is owned by Viacom 18. Viacom 18 is owned by IMG. IMG is owned by Reliance. And most of the people scroll through money control's website, target prices, this fund, this IPO, and nobody knows that is it being pushed or is it good for you. So this is all neuroscience behind investing. Now we'll go through certain concepts. One of the very key concept is a concept called hedonic treadmill. When there is a good period since, like say after COVID, in the last 3 years, capital markets in general have given a run up. So everybody are feeling happy. How many people invested? Just raise a hand. How many people invested over the last 3 days? When the markets fell 500, 900 points. How many people invested today? Right? 1, 2. Hardly hands up. So this is the time to invest. अभी कंजम्पशन में किसने इन्वेस्ट किया जब भी सब कुछ डाउन एंड आउट है? किसी ने नहीं. दिस इज अ टाइम टू इन्वेस्ट, राइट? व्हेन थिंग्स आर बैड, व्हेन थिंग्स आर नॉट इन फेवर, इज अ टाइम where you have to be contrarian. So, but by coming back to the topic of hedonic treadmill, it is nothing but a concept. Say in good times, people become very anxious. Excited, and in bad times, people are depressed. So one has to maintain a fair baseline of happiness. आज मेरा portfolio 5% up है on today's stock market behavior, overall performance. I should not get carried away. Or if say April 2020 reoccurs, if the stock market is down 40%, so you should not be bogged down and say, yaar, I'll just sell out my portfolios and go away. That is the time to invest in, actually. So at the end of the day, hedonic treadmill is basically a concept where you have to have a fairly stable baseline of happiness despite external fluctuations and events, because external fluctuations and events will happen, right? Negative events. कल ट्रंप ने 2 चाइना के सामने सैंक्शंस डाल दिए तो markets will fall. इंडिया के सामने sanctions डाल दिए तो IT and pharma will fall because they are all export oriented. But that should not impact your level of happiness, because that will in turn impact your decision making in investing. Another exciting concept is the Dunning-Kruger effect. What it states is it's basically a corollary between overconfidence and confidence and competence. So people with usually low skill set overestimate their own skill and knowledge, right? After COVID, the Demat accounts which has opened have almost been 4x, 4.5x. So every new investor is like, I know everything. How can I go wrong? Because in the last 2.5 years, everything has gone up and one-sided, right? So that means that people with low skill set, as you can see in the first quadrant of know nothing, but the confidence is at its highest. Competence is zero, but they know everything. So, but over a period of time, they will have a fall and they will have a slope of enlightenment. And as and when they gather information, data, explicit knowledge to tacit knowledge पे convert करेंगे, या तो expert opinion लेंगे, expertise से concern लेंगे, या तो फिर खुद research करेंगे, then only they will have to, they will be in this particular quadrant of being a guru and having confidence, right? So at the same, so markets will, and particularly when the markets are bad, when the markets are good, in this particular bull market is where you will stuff your portfolio with many stocks, because you will have a FOMO ki I will buy this stock, this will go up, I will buy that stock also, that will go up, और ये भी fund ले लिया. Classic example, I have known many investors who have bought quant mutual funds over the last 1 year because they were highest performing over the last 3 years. In the last 6 months, they are the worst performing, right? So that is not the herd, that is again a symbol of herd mentality plus this particular effect of you knowing yourself that you know everything, but that is not the truth. So this is the period when you will stuff your portfolio with lot of companies and lower quality companies. So especially in the bear market, your portfolio will get punished. So you should behave exactly the opposite manner. So simple. If you want to overcome this effect, you have to set realistic goals. You have to be continuously learning and being humble, and you need to know yourselves and admit sometimes mistakes which happen as per your own research. Okay, so what does this picture say? Does anybody know of the room? Absolutely correct. So this is the optimism bias, a game of Russian roulette. What it states is there's a gun, there are 6 chambers of a bullet, one chamber of a bullet is filled with the bullet and the other 5s are empty. So the probability of getting shot is 16.67%. 83% you are okay with. But how do you imply this in investing? As Nassim Nicholas Taleb, a great behavioral psychologist, says that you can be risk loving and yet completely averse to ruin. Meaning that in the world of finance, there are multiple geopolitical and macroeconomic things which happen, like central bank rate cuts, like government tariffs, sanctions, like wars, Russia, Ukraine, right? All these wars, new discovery of product failures, product successes, thing of threats of being obsolete, corporate frauds, etc., etc. So when you take everything into account, you need to know that how much risk can you take, and there has to be a tendency that you need to know that there is no risk which you need to take which you can wipe your entire corpus out completely. Basically, it's like if you are getting 15% for 25 years, it's good. But if you are getting 25% for 3 years and getting that same portfolio minus 60% for the 4th year is of no use. So simple, you have to somehow avoid ruin. Somehow, applicable to Russian roulette, you have to somehow save yourself from being shot. Simple. Okay, so this particular picture, Marilyn Monroe, everybody knows she's a pop artist and she's a world famous in pop culture, right? So I'll just go through, in a minute I'll just go through her story. She was born to a single mother, dropped out of a high school. Her mother suffered from mental illness and was in a mental hospital for decades. She divorced at an early age. She suffered from a miscarriage. She was attacked and harassed by the media. She suffered from stuttering and dyslexia and attempted suicide multiple times until she finally succeeded in 1962. Okay, so how we see this particular figure today. In Western economies, this particular figure is known as an exemplar of beauty, a gifted actress, a brave hero, and a mindless blonde. So, why are we speaking about it? We speaking about it is basically because when I attended a lecture on behavioral finance from a distinguished professor at MDI Gurgaon, it was in his presentation that this particular slide was there. And to my knowledge, he said, replace Marilyn Monroe's quote to Mr. Market's quote. So what it said is, I am selfish, impatient and insecure. I make mistakes and I am out of control at times, very hard to handle. But if you can't handle me at my worst, means how can you deserve me at my best? So just replace Monroe to Mr. Market. So if you cannot handle minus 50, 60, 70% drawdowns of your capital and your profits, you cannot ever taste the success. Because when the markets collapse, your behavior and psychology will be detriment to either push your capital out, or just try to see in your portfolio that if you have certain holdings which are minus 30, 40, 50% down, have you had the conviction to buy more? If you do so, then you are on the right path. There have been multiple organizations which have fallen over the last 3 years. The classic examples being Divi's Labs, HDFC Asset Management Company, Abbott India, recently Page Industries, which are down 30, 40, 50% from its peak. You need to have the conviction to buy when the stock falls. Who is buying consumption today? You need to buy consumption today. This is a knowledge sharing platform, nothing ideas related to investing. But if you don't be a contrarian investor, you will never make big money. Now we speak about another concept of a decoy effect. So, this particular is theoretically, this concept speaks about that when an agent's preference between two alternatives is changed by the availability of a third alternative, with similar characteristics, then the other to the other two with less attraction. So similar, if we talk about this concept practically, if you have say an example of a travel ticket from Ahmedabad to Delhi via Jaipur, say it is costing 5,000 and you have a 1 hour layover at Jaipur. So will you buy this or will you buy the second option if there are only two options? But there is a decoy option, which is the third option, which is 1 hour more layover but the same price. Because there is this third option of a decoy effect, you will buy the second option. But if there were only the first two options, you would not buy the second option, only the first option. So we'll take this example into financial markets. I'll give you two examples. Recently, couple of weeks back, I met an NRI. He told me that his wealth manager, a banker, offered him a particular financial product, 6 lakhs of investing for 10 years and getting money from 12th year for 20 years, offering a 12% return. I was like, okay, great. Please share with me, that particular product. He shared with me. We evaluated that product. Post tax, it came to 4.6% IRR. Basically, that was nothing. But the guy, the NRI, why would he want to invest in India? After currency devaluation, he would at least want to get 11%. Otherwise, there's no sense of investing in India. But the banker offered him a ULIP life insurance policy combined with investing, which offered him 4.5% post-tax. Which means that you have to beware yourself that bankers, wealth managers, and financial intermediaries would offer you 100 things. But what your exact needs are, you need to evaluate or consult an expert such as us, who give you unbiased service. And second example, why would a car dealer offer you multiple discounts when you go to buy a car? And he is so intimidated that the first year's car insurance has to be taken by them. He'll give you a discount of 20,000 but charge you 75,000 more in premium than the second year's premium. Why would he do that? Because that's a decoy effect. He would show you that there are two things which he is giving additional, which is a decoy, and he is charging you 3x in the first year's premium. That is why echo chalta hai, varna echo nahi chalega. Right? So, bridging this real type examples to this decoy effect. Lastly, I would like to talk more about a beautiful concept, a disciplined approach to life, and how can that be learnt in investing. You know, the Japanese concepts of Kanban, Kaizen are just brilliant, right? So similarly, Japanese have this tea ceremony which they have annually for the entire family and extended family. So what they do is they have a proper formal system on what they wear, how they sit, how they prepare the tea and the tea ingredients which is called matcha, and how they receive the guests and the family members. So what we can learn from this, we will not get into that process, you can do it, Google it, but what we can learn from that and analogize from this Japanese tea ceremony is that be patient, don't rush in, enjoy the process, because process itself will take care of the results. Take advice from subject matter experts who are in full time. Understanding yourself, understanding your cash flows, understanding your spending and saving behavior is of very primary importance. And lastly, one of the most important thing is you need to know how much you need to save and spend, which is instant and delayed gratification. Lastly, the topic of the ideal time horizon which we had in the first slide, what it said is 7 years, right? Average holding period, which should be there. This is backed by data that if you see that given the number of occasions in which people have got minimum 0% से तो नीचे negative return होगा ही नहीं. कब नहीं होगा? If you give a 5-year horizon to a portfolio, whether it is any equity related investment, if you give 5 years, then it is only 0.1% that you will get a negative return or zero return. उतना पॉजिटिव में मिलेगा. और 7 years के ऊपर आओगे तो 0% रिटर्न तो मांगता ही नहीं है, अनलेस एंड अनटिल यू बाय अ क्रिकेट प्रमोटर, प्रॉपर वैल्यूएशन पे नहीं लिया और हैफेजार्ड इन्वेस्ट किया तो. बट इफ यू इन्वेस्ट वाइजली, द प्रोबेबिलिटी ऑफ गेटिंग 0% return for more than 5 to 7 year horizon in equity is technically zero, which is in your favor. So average holding period should be 7 years minimum. Plus, अगर इन्फ्लेशन को बीट करना है 6, 7, 8%, तो 10% तो रिटर्न चाहिए और मिलता है. तो उसके लिए इफ यू हैव 7 years, इफ यू सी द हाईएस्ट प्रोबेबिलिटी 83 से 15 year 95%. So equity or equity related investments, if you want to get 10% to 12% to 15% से ऊपर रिटर्न, तो 10-7 साल के ऊपर का होराइजन में यू आर डेफिनेटली मच बेटर ऑफ. सिंपल. I would like to conclude that emotional intelligence is much greater, plays a very pivotal role than IQ. If somebody is a gold medalist from IIM Ahmedabad, but somebody here is just because there are examples, and is just a normal investor, started early at the age of 25-30 and he invests for 50-60 years, he can be that portfolio can grow to more than 1,000 crores, which cannot, so IQ has no correlation with emotional quotient, right? Whether it is related to any financial instruments. Thank you.
Good evening. Thank you, AMA, to giving us opportunity to decoding and demystifying various aspects of behavioral finance. The topic is not very attractive at this point of time because everyone is making a lot of money in IPO. Still, you came, thank you for that. Market is also down, still people want to learn. Generally bear market people come, but in bull market also people are willing to learn. So that's great thing for you. Already we have seen the data that Sensex has given a return We already data 15% return for last 20 years, 15 years, 25 years. Even in mutual fund fact sheet, if you see, in SIP investor has under 20% return, 25% return. But that is on paper. But actual investor has not made that much of money. Why? Because of this gap. That is called behavior gap. That is the difference between the investment return and your investment. That is my return. Because it's not same. Asset class has generated return. Equity market, Sensex has given a return. But as an investor, I have not earned a return. I have not generated that much of wealth. And this studies by behavior finance. Already Benjamin Graham also conveyed in his books, Intelligent Investor, that investor's chief problem and his worst enemy is likely to be himself. So there is a traditional finance theory. People who has done MBA finance, they know that efficient market hypothesis, which tells that all individuals, investors are rational. Everything is priced in. So there is no case of underperformance or overperformance. That tells. And markets are efficient. That is their assumption. But that is not real life. It is not possible. So behavior finance, who has done the research, they come out with that study that investors are not rational. Their assumption is that hypothesis. And that's why their decisions are driving by emotions, temperaments, and their expectation of the returns. There are different biases. And that's why they take suboptimal decisions. The decisions are driven by these biases, emotions, and that's why whatever the decision they are taking, that is suboptimal. So there are various biases. Because of the time constraint, we are covering certain biases which influences behavior, investment in their decision making. There are certain cognitive biases which are nothing but the shortcuts. Our mental design are that we prefer, instead of going for a process oriented thing, we select our mind select a shortcuts. That is called cognitive bias. Emotion biases, we see the examples. One of the major biases of emotional biases is loss aversion. That means what they have done, behavior finance people, what they have done the research, they come out with the conclusion that pain of loss is higher than the pleasure of gain. Means if I am losing 100 rupees, I have gained already 100 rupees, but I am losing 100 rupees, that giving me more pain, means I am unhappy about it. Actually, it is same thing. In accounting terms, that is the same thing, 100 loss, 100 gain. But my mind has certain programs that I am unable to see that loss. That is called loss aversion. What this typical bias affect the investment decisions. Now let's take example, you have investment in ABC Limited. Your investment amount is 1 lakh rupees and current value is 75,000. Means you are in loss currently on notional terms. There is another company XYZ you have in your portfolio where you have investment amount is 50,000 but the current value is 1 lakh rupees. Now you need some emergency fund, whatever be the reason, you need 50,000 rupees. Now my question is, you want 50,000 rupees, you want to withdraw from these two companies. Which one you will select? XYZ. So theoretically, yeah. Exactly. Right, exactly. So that is called selling winners and holding losers for perpetually. Means it is our mind that think I should not book the loss. Then I will do search that ABC Limited company, how is their prospects? I will search for YouTube video for the analyst and they said ABC Limited is a good buy for a long term, so I will hold. I'm thinking it's a minus, but company is good, so I will not sell. What I will sell? I will sell the profit, which is giving me the gain. This, whatever the bias I have discussed, is not applicable for retail investor. It is applicable to all. It is applicable to fund managers, even in FIIs. Why FII selling? Now that's the question. Every day they are selling since so many times, so many months. Last month is the highest outflow. historically. Why? They are also suffering from this bias. Because FI has invested in other countries also. But in other countries, they don't have gain the way India has gain in their portfolio. Still, whatever the happens, but in Indian market, whatever they have invested, still they are in positive. And that's why selling. In other markets, they are not getting opportunity. So again, their thinking is also same thing. Loss. Loss I don't want to book. So what people are doing, people who are suffering or people who has these biases, some people are only investing in fixed deposits. They are not happy to see the volatility. So either they out of, means I am not comfortable to see my market value down. Money control, everyone see 1 hour, every 1 hour. So some people are seeing every 1 hour, what is my portfolio, what is the position. And they are not comfortable, though they invest in fixed income securities. They prefer, I will not invest because I cannot digest that volatility. So there is another set of investor. Another set of investors, generally we have data of equity market, so we discuss all about equity investments. But real estate is also one of the asset class where people are unable to book the losses. I'm not talking about residential home. People who has invested above residential, they've invested in office or plot in Nal Sarovar area or farmhouse or any other as an investment. Once I say it's an investment, it should generate a return. But this asset is not generating return if I calculate. Now I decided that I want to sell. Now, for example, if 1 crore flat is now fetching only 95 lakhs, for example, after 3 years. So again, I'm avoid. I will prefer status quo. I will think it will rise and I will not sell my real estate, whatever flat or whatever investments. I will hold that thing. What I will do, I will prefer to give it rent. 1 crore flat, it is negative now. I am losing my capital. So again, I will not able to sell. What I will do, I will give the on rent. Now what will be the rental income per month? Well, let's assume that we get 40,000 rupees per month. An optimistic side, 40,000 rupees, almost 5% you can assume. 5% return, I'm compromising. 5% return is less than the inflation rate. But still I will hold, I will not sell, I will not calculate because I'm unable to book that loss. If I withdraw, if I sell it, I will get 80 lakhs or 85 lakhs and reinvest somewhere else, I'm generating better return. But that hurts me. On book, it's fine. Lot of people has their demat account statement, 5 pages, 6 pages. In the last pages, they have this losers. They are unable to exit. Since so many years, they are holding, they are seeing their holdings, but they are unable to exit. Now the portfolio size is big. The amount of that particular stock is very minuscule. Means that if that stock is double, then also they don't have any effect. For example, 1 crore portfolio, you have stock like 5,000 rupees value or 10,000 rupees, but still they are unable to exit from that stock. Now, we understand this bias, how we can overcome. We are lucky that government is helping us. Finance Minister, Income Tax Department is helping us to overcome this bias. That is called tax loss harvesting. Now, emotionally I am not doing, but accountably, in terms of accounts, if I am doing this, then I am also gaining. How? Because there are provision of short-term loss. Now, first we see the capital gains in equity market. So, capital gains current slab is 20% rate tax for short-term capital gain. Means whatever mutual fund or equity investment you have redeemed before 1 year, that attracts gain on short-term capital gain 20%. Similarly, in long-term, asset equity shares or mutual fund we sell after 1 year, then it would attract at 12.5% long-term capital gain tax. In that, there is another condition that 1.25 lakhs gain, capital gain up to 1.25 lakhs is exempted. So this is the another advantage. So gain up to 1.25 lakhs is exempted. Above that, it is 12.5%. Now let's assume that I have a gain. I have invested in IPO, Vari Energies, yesterday MobiQuip, every day there is a gain. If I am invested in SME, then 90% gain. So I have gain, but I have no loss. then in that also there are conditions. I don't have loss, then what to do? But I have invested in Avenue Supermart at rate of 5,000 rupees. Current is around 3,500. If I am convinced that Avenue is good company, I want to hold this company for long term basis. One option, I stay invested, I do nothing. But another option is I sell Avenue Supermart and again I will buy. When I sell Avenue Supermart, I am booking the loss, that is short term loss. And this short term loss can be set off against whatever I have gained in Vari Energies or MobiQuick. So it's a tax efficiency thing. Means nobody realizes, means people are thinking it will come up. Avenue is good company, I will not do anything. So status quo is not, that is harmful for, so government is giving you this opportunity even for a long term. Now market is gaining, so very few opportunities will get for booking the loss. So if you are getting any opportunity, it's best time to book some losses. And this loss, another advantage is, for example, I'm not getting any allotment in IPO. So there is no short-term gain. But this loss, short-term capital loss, I can carry forward for up to next 7 years. So in future, whenever there will be a loss, I can, whenever there will be a gain, short-term, I can set off this my loss against that short-term capital gain. So this is the one area. So government is helping you to rebalance. People are thinking I am a long-term investor, I will not do, good companies are good, but you have to do for this taxation purpose. Lot of senior citizens are here and they have some program when they are investing in PPF. So whenever financial year start, on 1st April or 2nd April, they are investing in PPF. Previously it was 70,000, then now 1,50,000. So every year they invest in 1,50,000 in the month of, so first they do the planning for section 80C. Now you have to plan reverse. Reverse means capital gain. As per current, I have said long-term capital gain is exempted up to 1.25 lakhs. But there's 1.25 lakhs is for particular financial year. So if you are not booking anything, this will go. So now you have to reassess your portfolio. Then whenever you have a portfolio, there is a gain of 1.25 lakhs. So you have to sell 3 lakhs or 4 lakhs to have this gain of 1.25 lakhs. So automatically you can rebalance. Now you can book these profits and you can transfer to other asset class, or you can reinvest in the same company if you have conviction. If you find out that there are companies you have underperformer, you can also exit. The same is applied for mutual fund. Mutual fund also have certain mutual fund come with NFO, where they have negative NAV. Some has 9 rupees, some also reach 8 rupees NAV, 10 rupees NAV, NFO has now 8 rupees NFO because of the market has down. Same thing you can apply in mutual fund also to book the short-term capital loss. Why it is important? So how we can overcome again? If we have clarity in mind that these are my goals, I want to achieve this goal, retirement or children's marriage or education, then I can invest, decide the asset allocation, how much percentage I want to invest in equity, in bonds, fixed income or gold or real estate. If I have clarity in that, then I will not suffer from this bias because I have diversified portfolio. Why a lot of people, lot of wealth has stuck? Because I have overexposure to certain asset class. I am overweight on real estate or I may be overweight on equities. And any decline, I am unable to sell, I am unable to exit because I don't want to book loss and money will be stuck. That will be not used. So all for asset class, the diversification is more important at this point of time. Herd mentality, we have seen a lot of bubble years in 1992. In 2000 also, technology time, we have companies like DSQ Software, Penta Media, Hindustan Future, HFCL, Global Telis. People who has invested, they must be known in 2000. Technology time, lot of companies has abnormal valuation. If somebody has invested in 2000 in Infosys also, it takes 10 years to break even that price. So 10 years in a particular stock. Also, company is good, but stock is not good because of the price. People has a conception, the company is good at any price, I will invest, but that is also not true. In 2008, there is an infrastructure time. Lot of power sector company, real estate company also has abnormal valuation, and they also come with the IPO. In mutual fund also they come with the infrastructure fund. Infrastructure fund NAV was 10 rupees NFO in 2007. It takes 7 years to recover. In 2014 election, after election, that 10 rupees will come. That also NAV has been fallen because of the abnormal valuation. Another emotional bias is self-attribution. Self-attribution means one of the characteristics that I know everything, and whatever happens, because it's my skill, it's my knowledge, and that's why I'm generating profits. So people are over trading. People has lot of confidence. They think lot of money I'm making. Lot of time we meet the people. They said I have invested in these stocks. Now it is this, but they never disclose their loss, where they are losing money. Everyone talk on good things, that I have made this much of profits in particular script. People deny the mistakes. Even I have invested in a company which is not performing, I will still not able to sell, and also I'm not accepting the mistake, that it is my mistake. You have to accept that sometime market is right and sometime you are right, but be humble and accept your mistakes so you can move on. Otherwise your portfolio will be stuck in certain companies where they are unable to outperform the market. That also leads to overconfidence. People are overconfident. Next we will see what is the problem with overconfidence. And these people take higher risk. People nowadays, if you see the people, investors, because they are generating so many returns, they take higher risk. They are unable to diversify. They think equity is the only thing, and I have expertise, I can make easily money. Easily I can make 20% return, 25% return. Self-attribution leads to the overconfidence bias. This overconfidence is in that people overestimate their knowledge, their ability to predict. People are going to predict that what will happen when Donald Trump will assume his office in the month of January. What will do, Fed will do, what RBI will do. Lot of time they spend time on predictions, where nobody knows what will happen, but they have confidence that this will happen and stock market will down or up. Accordingly, they will invest. Significantly, they underestimate the downside risk. Because I know everything, I have confidence that I am making money, I will not diversify, I will not look at fixed income or gold. I have shown these two things, two asset classes now ignored when I meet people, investors. Now everyone is so much bullish about Indian equities, they are not diversifying. But fixed income instrument and gold work as a airbags, or you can say seat belt. When any accident coming, then they can protect you. But now we don't see any accident. We think everything is good. It's very easy to make money. By investing also, some people are investing in IPO. They said, I'm happy. I don't want to invest in secondary market. I'm making money. I have 10 accounts, family member, and I'm applying. So there is no need. But that is not possible every time. This trend cannot continue. Otherwise, all business will be shut down. Everyone will invest in IPO. And they can make money. But that is not possible for a significant long period of time. So less diversification in portfolio is injurious to health. We have never seen the drawdown. There are two types of investor now, two sets of in terms of psychology, pre-COVID investors and post-COVID. So pre-COVID investor has seen the downfall, what I have seen in 1992, 2000, 2008. So they are more skeptical. They know PE ratio, they know valuation. But the new people who has came after, so they have not seen this drawdown, how market falls. And hence they are taking very aggressive bet. And they are also not paying attention to the diversification. So some money is required to be fixed income for the emergency fund or in gold. Because they think their perception is only return. I am not generating any return. Or I can generate higher return than fixed income and gold. So why should I invest in that? That is their argument. But that is not true. For post-COVID investor, just I have some data who has not seen the drawdowns, means how a market can fall. in 2000, I'm not going before that, 2000. For example, the peak, the dot-com boom, the peak Sensex was 6,000 on 2000 February. Then Sensex falls slowly. In 2001, after 9/11 incident, the Sensex made a bottom of 2,600. Now I'm talking about Sensex. Individual stocks are much more. The fall in individual securities are much more than that. This is only Sensex represent. There is a 56% erosion in capital. And this fall, how much time it will take to recover that fall? 6,000 index will touch हुआ January 2004 में. So it takes 3 years and 10 months to recover the capital. So in equity market, there are two corrections. One is a price-wise correction. Price means price will fall, 100 becomes 70, so 30% price. And another is time-wise correction. The price remains same, but for a significant period of time. In real estate, we are witnessing that time-wise correction. 1 crore flat value before 3 years था, आज भी वो 1 crore है. So that is ultimately you are losing your interest. So one scenario this. Another is subprime crisis. Before subprime crisis, we have a Reliance power issue in the month of January 2008. The Sensex was 21,000, and March 2009, it was 8,000. So 61% fall. And this, again, it takes 2 years and 10 months to recover again 21,000. And third scenario we have seen, recent time, pre-COVID, January 2020 was the highest Sensex was 42,000. And 23rd March, which is the lowest bottom of 26,000, 38%. This is the fastest erosion. Earlier two scenario, धीरे down जाता था, इसमें 2 महीने में पूरा down हो गया सबका 38%. This is again a Sensex value. Individual stocks has fallen much more than that. So on that day, we have never imagined that stock will bounce back also. But it takes only 10 months to recover that same 42,000 level. What I want to convey, that people who has not seen this drawdown, you have humbleness, that every time you cannot make easy money. You have a patience, you should have patience, or you have a diversified portfolio that can protect overall fall in your portfolio, even if equity falls significantly. This is another data which tells the calendar year return. Calendar year return means I've taken the Sensex value on the 1st January and I've taken the value of 31st December. And what will be the returns I've calculated? For example, in the year 2008, there was a negative return of 51% in calendar year. In that particular year, drawdown means what highest point of Sensex, वो साल का जो highest index था, उसमें lowest कितना हुआ तो वो 60% हुआ था. In recent times, 2020, the lowest was 38%. So if you see the average, so average 10 to 20% fall in any particular area is very normal. Only sometimes we have seen earlier slide that it takes in a decade, once in a decade we have a fall like 35% or 40% or 50%. But in a normal circumstances, every year, Sensex correction in intra-year is around 10 to 20%. Another interesting data is from 2016, if we see, 2016 to 2024, not a single calendar year we have a negative return. Calendar year, that means 1st January I have invested, 31st December I have exited, but not a single year from 2016 to 2024 we have negative return, calendar year return. And that's why people are more confident about equity market. That's why they are not diversifying. They need the diversification. Let's look at the certain biases which are cognitive biases nature, that is anchoring bias. Anchoring bias means that I assign particular value to certain numbers. So I may assign numbers, for example, my purchase price. If I real estate investor, what is my benchmark? My purchase price. I have invested in 1 crore flat. So I want to sell above 1 crore. Same way in stock also. I'm invested in any stock. So my benchmark will be two benchmark. One is a 52-week high, another is 52-week low. So 52 week high से कम मुझे बेचना नहीं है, because I want to, that is the price I have seen. Same way I want to purchase, I will see 52 will एक से तो ज़्यादा है अभी, I don't want. See, these are the anchor point. And these are also, because of this, we are unable to take the prudent decisions. There are certain people who has certain business group. They are anchoring with the associate business group. For example, Tata Technology, I have given the example. Tata Group, I am fan. I think that all Tata companies will do well. So I have invested on listing day. I am not allotted in Tata Technology. I have invested at 1400 rupees because I think Tata is the best company, any company of Tata. I am not saying this is a bad company, but the price, current price is 930 rupees, 1 year. It's not bad company, but bad stock. Companies are good. Again, it's a short term. I am not giving example that you should exit, but just giving example. These are my anchor, that all companies are not good or maybe good, but what price you are buying, that is also important. Another is availability bias, that lot of information, I decide on what information I am having, and accordingly I will decide where I want to invest or disinvest. Now FIIs every day selling certain figures coming, so that is another influential. Now budget is coming, so every day now you will say in the news item, budget will give thrust on pharma sector. Means in newspaper knows, finance minister don't know, but newspaper will give every day. And if they want panic in the market, they will come with the news headline, capital gain tax likely to increase. So current is 12.5, they will say experts are expecting 15% capital gain, and market will go down. Then finance minister is somebody, we don't have any provision or we don't have any. So these are the, whatever we decide on the whatever the informations are available to us. Another is mental accounting. We have, our mind is working in a different accounts. So for example, I have money is same, but how I look is differently. For example, I have income tax refund. So assume that I received a 50,000 income tax refund. What I will do? I will spend because I have not expected. So my account is different, though it's my money. Similarly, IPO. MobiKwik, I have allotted, I get money. What I will do? I will spend Christmas in Goa. However, what you have to look at, if I am already running a car loan or housing loan, first I have to think to repay that thing. Because this windfall gain is not coming every day. But how you can judge? Means because it's a bias, because it's a free money. If I'm working and I'm receiving a salary, that's my hard-earned money, so I will not spend. But I take different thing, different mental account for this type of thing. So I'll spend more. Similarly, bonus. A company announces bonus. Bonus is the account entry. Price will reduce, but I will buy. What is my assumption? That after bonus, number of shares will increase, and after certain years, again, the price will reach pre-bonus level. That is my assumption, and I will invest. Similarly, split. There is nothing, change is fundamentally, but it's my mental account. It's a free, I'm getting higher number of shares. People who are trading frequently, they ignore the cost of capital gain and brokerage. People who frequently trade. Means what I assume that I invested in Vari Energies, I made 2 lakhs rupees. So I spent 2 lakh rupees. But actually I have to pay short-term capital gain, 40,000. So net return is 160. But I am not accounting that part. I am spending 2 lakhs rupees. Like that. Similarly, credit card. If I want to pay through credit card, my mental account is different. Because I don't have to pay anything. I am going to a Palladium mall because of the discount season is coming. So I will purchase. The things which are not required also I will do because I don't have to pay. If I want to pay from cash, then I will think that is it necessary for me? Similarly, high stock prices. Somebody said, I will recommend, Vatsal has recommended MRF to buy. Will you buy? Vatsal has insider information about MRF. Will you buy? No, because it's your account. 1,30,000 को double होने में कितना time लगेगा? Instead of that, you will buy Vodafone. It is available at 8 rupees. It's your perception that 8 rupees will become 16 rupees. There are high probability 8 रुपया का 16 हो सकता है, पर 1,30,000 का double नहीं हो सकता है, यानी short period. So this is also mental account, how we see the things. We can use in a positive manner that we can create a mental account for our investments. Like we can have emergency fund, separate investment, we can plan for that. We can invest in short-term fund or debt fund. That is our account. That this fund I will not touch. Similarly, we invest in a retirement. For example, I have done SIP my label. I will label that SIP for the retirement. So if market will decline, but I will not withdraw because I have this fund is for my retirement. You can use this also for your investment decision. So advantage is also there. Same way, you have different goal for vacation. You want to go Dubai or Singapore after 3 years, you can plan whether I will do SIP or I will invest in stock. This is for only for that purpose. So market will decline or whatever will happen, I will not exit. This is also advantage of mental accounting. This is the chart of emotions. Bull markets, that is one quotes, bull markets born in pessimism, grow on skepticism, matured, and then fall on euphoria. Same is happening with the individual investors. Investing is one thing, but your behavior is everything. There are certain points also I want to summarize that. Plan of action. I will share the insights for the what you can do. You can do for the what I have conveyed, the short-term capital gain or loss. You have to calculate that. Be clear about the clarity of financial goals. Once you are clear for that, you can plan accordingly. Periodic review and asset allocation. Diversification is important. Though market is moving very fast, you think equity is only asset class, but that is not right. You have to diversify to make the any accident happen, you can save yourself. Another thing, focus on your what you control, means your saving or your spending, you can control. You cannot control Donald Trump, you cannot control US interest rate or Indian interest rate, RBI governor, geopolitical thing. But what you can control is your earning or your spending. And that you can create wealth. You can invest in certain asset class where the compounding effect will work. And another thing is, advisor jaruri hai. You think lot of people will think we can do directly, but still some advisor if you are have, then they can manage certain biases you are having. Again, we are advisors, so we are biased. Thank you very much.
We have time for some questions. So one request, please specify whom you are addressing the question to. Yeah.
बहुत अच्छा लगा फाइनेंस को बिहेवियर साइंस से कनेक्ट किया। ये आमतौर पर होता नहीं है, ये हो रहा है, ये अच्छी बात है। शाह साहब और सुमित्रा जी, धन्यवाद, आपने बुलाया हमारे को। हम कुछ मिनट लेट हो गए, तो मेरे आपसे ही सवाल है, बाकी से सवाल नहीं है कि मेरे घर के बगल में रहते हैं, तो इनको चाय पिलाएंगे फिर हम पूछेंगे। तो मैं रिवर्स ऑर्डर से बात कर रहा हूँ आपसे। मेरा क्वेश्चन तो 4 शब्द का ही होगा और मैं चाहता हूँ आंसर भी 4 ही शब्द का हो ताकि हम सभी सेटिस्फाई हो सकें। ये आपने जापानी टी के बारे में कहा, ये आपको सवाल नहीं है। वहाँ लड़की को जब सेलेक्ट किया जाता है और चाय पर ही सेलेक्ट किया जाता है। कैसे शी ब्रूइंग ए टी, कैसे कप लेकर आ रही है, ये कैसे, ये उनके समाज का हिस्सा है। तो आपने थोड़ा हिंट मारा, बुरी बुरा बुरा, उसको छोड़ दीजिए, वो लंबा टॉपिक हो जाएगा। तो ये बहुत अच्छा है कि ऐसा हमारा भी कल्चर था पहले, अभी कल्चर के एग्रीकल्चर हो गया, अभी कुछ और हो गया है, पता नहीं क्या होगा। ये तो ऐसे पॉइंट ही था मेरा। दूसरा, ये जो डिकॉय इफेक्ट है, इसमें जो पढ़े लिखे लोग बहुत होते हैं उनको बड़ी तकलीफ होती होगी, क्योंकि कॉग्निटिवनेस से कनेक्टेड है। और मैं बिहेवियर साइंस का हूँ, मैं फाइनेंस का नहीं हूँ, तो इसका तो बहुत तकलीफ होती होगी लोगों को जो पढ़े लिखे हैं। आखिरी में एक पॉइंट बोला EQ एंड IQ, फिर आई एम प्रोफेसर का नाम दे दिया, तो छोड़िए। मैं आपकी जानकारी के लिए बताना चाहता हूँ, EQ इन द कंट्री हाईएस्ट जो है गुजराती के पास है। इमोशनल इंटेलिजेंस जो है, जिसको विजडम कहते हैं, वो हाईएस्ट जो है वो गुजरात में है। ये मेरा सर्वे किया हुआ है, इंटरनेशनल सर्वे है, ये मैं बता रहा हूँ। इस 2002 के मेरे पेपर निकाले ना, उसमें मिल जाएगा आपको, लेकिन गुजराती नहीं लिखा हुआ है। वो तो गुजरात में यहाँ रहता हूँ इसलिए बोल रहा हूँ मैं। हाईएस्ट EQ जो है गुजरात का है। EQ मीन विजडम, इंटेलिजेंस की बात नहीं कर रहा हूँ, ये सारे IAS IPS तो बाहर से आए हैं, यहाँ के तो है ही नहीं। तो हाईएस्ट है जो है गुजरात का है। इसी बात पर 1992 में इतने मर्डर के, इतने सुसाइड केस क्यों हुए, उसके बारे में सोच विचार करेंगे। 1992 में ज़्यादा करके अम्बाबाड़ी और वस्त्रापुर में, और ये जो है नवरंगपुर है, यहीं सुसाइड केस बहुत ज़्यादा हुए हर्षद मेहता के टाइम पर। वो तो खुद मर गया जेल के बाद। तो ये वाले केस इतना EQ होने के बावजूद फाइट हैपेंड, ये बड़ा मैटर ऑफ कंसर्न है। थैंक यू।
Thank you. Anyone else?
First of all, thank you very much for the insightful. Behavior science was one of the very insightful, new for me. I mean, I've been investing since long, but this is something really new. तो मेरा एक प्रश्न ये बायसेस के रिलेटेड था कि जैसे आपने सर ने बताया, बहुत सारे मेरे अंदर भी, मेरे जैसे काफ़ी लोग होंगे जिसको बायसेस आ गए हैं। और मेरा एक प्रश्न रिलेटेड टू क्वांट था, आपने मेंशन किया क्वांट का परफॉर्मेंस। तो एक बायस वहाँ से आया कि 3 साल बहुत अच्छा परफॉर्मेंस किया, थोड़ा बहुत ज़्यादा नॉलेज मुझे है कि भाई उसका टर्नओवर रेशियो काफ़ी ज़्यादा है, तो वो क्विकली बाय एंड सेल हो जाता है, तो मोमेंटम स्ट्रेटेजी एंड लाइकवाइज। बट यू ऑल्सो मेंशन अबाउट के लॉन्गर द होल्डिंग पीरियड बेटर द परफॉर्मेंस। तो ये सब बायस इसको कैसे टैकल करें? और दूसरा ये भी एक था कि यू से मेंशन के जब मार्केट डाउन होता है इट्स द बेस्ट टाइम टू परचेज। तो क्या वही थियरी अभी क्वांट को अप्लाई हो सकती है? बिकॉज आई एम लाइक हैवीली इन्वेस्टेड इन सम ऑफ द क्वांट म्यूचुअल फंड्स, तो थोड़ा ये बायस।
No, 1 minute. We don't. We will avoid any specific and no investment related. ठीक है. So let him
Hello.
behavioral he can speak, but not whether to invest or not invest in quant currently. That is, as per SEBI rules, I would
Correct.
suggest he should avoid.
So we should not talk about particular equities or particular funds, but as a whole, whether if you talk about any particular fund house, you should know what the strategy of the fund house is. So the fund house you mentioned works on the philosophy of predictive analytics. So predictive analytics क्या होता है? I think you would be knowing before investing. So go through the thesis behind the fund and then invest wisely. And I would say that bet on the fund manager, bet on the fund manager's history, bet on his team, and there are multiple factors on how to evaluate a mutual fund. That is why a advisor or a handholder is required, because everybody, I mean, if somebody is an HNI or ultra HNI having a portfolio of 1 to 5 crores and above, they would want to go direct in mutual funds, but you should have the ability to do the behind the scenes work, like as you said, you have suffered losses by investing in this particular fund. So you should know the reason behind investing and then only invest. Otherwise, you need to have a subject matter expertise. Simple.
I think quant may be notional loss, not actual loss. Yeah. So
Just a minute. I will add also. I will add in that concern. First, clarity is important. Means how much you have allocated in equity. Suppose you have invested in 70%. Now 70%, in that also you have certain percentage in direct shares, in certain in mutual fund. Within mutual fund, how you have diversified? How many AMC you have invested? There should be certain process you have to follow. For example, you have to take rule, means you can make a rule that any AMC I will not invest more than 10%. Suppose in a particular AMC you have invested in 3 schemes, then there are chances that their portfolios are overlapping. For example, the fund house you have mentioned, if you see all the schemes, there is overlapping. So ultimately that is increasing the risk. Means how you understand that? Once you see the fact sheet, then you know that there is overlapping. So ideally you should invest in one scheme only, in particular fund house where there is a huge overlaps. So you can diversify. And how much percentage? So if you have invested 5 or 10%, then overall there will be not much more fall. So higher exposure in particular AMC, because that performance is very good compared to others, again that leads to risk. So you have to maintain certain percentage to particular scheme. Yeah, that's all.
Lastly, adding to this point, you have to be very concentrated. पूरे household में 5 से ज़्यादा equity scheme नहीं होनी चाहिए, 3 से ज़्यादा debt scheme नहीं होनी चाहिए. अगर if you are as a household, if you are investing into 25 equity schemes, then benchmark लेके बैठे हो आप, 11-12% के ऊपर मिलने ही नहीं वाला. That is for sure. Because as he rightly mentioned, there's so much of overlapping that you have bought into 500 stocks. So 500 stocks में, if you have a probability of normal distribution curve, 70% will underperform, 5% will outperform, and rest will be averaged. तो आपको index return ही मिलेगा. Simple.
No, we'll avoid stock specific, please.
Good evening once again. As a behavioral aspect is not an isolated subject. We will have to define the stakeholders. One is investor, another is monitoring agency, third one is I think regulatory agency, and interrelationship will also affect on this. And if we, as a standard planning procedure, if I have defined my short-term, medium-term, and long-term goals, then suppose as for taxation, every year budget is, I think, defining for the next year. So I will have to review my short-term goals in relation to that fashion, or that is what? That is one aspect. And suppose as an internet relationships, I think as a news today only SEBI has defined that I am having my own industry. I am going to have. I am going to. I will be. I am thinking for having my own SME IPO. Now they have given 1 crore operating profit. So how this planning and interrelationship work? Just as a gross thing.
So I'll not get into the other second part what you said, but because but talking about whether who are the major stakeholders into behavioral psychology and investing, you are the primary stakeholders. It doesn't matter who are the regulatory bodies, because at the end of the day, पैसा आपका है. It's your hard-earned money. Where you want to deploy, you are the owner of it. And whoever comes to you and whosoever the entire community is, it is who are deploying.
Reviewing my selling or buying will be related to that frequency.
But
No, Vatsalva is saying that supposing coming budget, that 12.5, they make it 15%, as you were saying.
correct. So if
शॉर्ट टर्म अगर टैक्स सेविंग और शॉर्ट टर्म है तो मेरा वो गोल का उसी तरह से रिव्यू करना पड़ेगा. दैट इज व्हाट आई एम आस्किंग. इज इट
correct. So but your tax planning, your trading frequency, that should be correlated.
एंड गोल सो इट शुड
Goals are very goal is not that मेरे को 1 crore profit trading का चाहिए. Goal is that at the end, if that is your goal, that is very different. But the goal should not be like that. The goal should be something like मुझे materialistic, right? Retirement planning or automobile or house.
be always short term, medium term and long term as a standard planning process.
So what is your short term? Is it as per tax 1 year?
मेरा शॉर्ट टर्म के लिए मुझे फ्रीक्वेंसी ऑफ सेलिंग एंड बाइंग आई विल हैव टू मैच फॉर दैट. मीडियम टर्म के लिए अदर रखना पड़ेगा.
Usually हम क्या करते हैं when we sit with clients?
I cannot average out short term, medium term and long term in general.
Correct. So what I'm saying is that for us, when we speak with clients, say for example, we are advising you, our short term is less than 5 years. तो 20% तो short term capital gain हट ही गया. Clarity हो गई.
Irrespective of capital gain or short term goal, and if that is not realized, then I think at the end of 2.5 years, I will have to review
Review should be every yearly.
every year.
Yeah.
Like that.
Yeah, or 6 monthly, whatever suits your mind.
For short term, as you said, 5 years. And
हाँ, because short term is 5 years. Equity में 5-7 साल तो normal है. ये तो last 2-3 साल अच्छे हो गए तो हो गए.
like that
Correct.
for medium and long term.
Correct.
No, there is one possibility. You should look at if there is any major change, like you said, budget or any other government announcement. That time you review your budget.
That automatically.
So that is what. So in between, so you can't. So as you said, annually you do, or when there is any major announcement, you have to review your portfolio. Any other questions? Yes, please.
Hello.
So everything we discussed today was pertaining to the stock market. So I want to ask you that, so if, like I'm an angel investor, I invest in startups. So will behavioral finance or behavior aspect work in the similar way when we are dealing with startups also? Or there we have a different science going altogether? Because for example, I've invested in a startup and I'm getting a decent exit. So in 2.5 years, I'm making 5x. But should I exit or should I not exit? I mean, I'm just giving an example because we have always heard about, you know, startups generating 100x returns and people getting, you know, multiple x returns. So is it wise enough to stay complacent at 5x, or should we stay invested and try to be a hunter and, you know, target about 100x or 50x? So where does behavioral finance or behavioral science talk about?
Simple answer. First question, what was your thesis behind investing in that startup?
My thesis was I was not even worried about returns. I was even prepared to make a loss because I was just wanting to contribute towards the economy. That's
Correct.
it.
So now when your principal is 5x, what is the management of the company saying? What you need to sit, because as an angel investor, you have the opportunity to directly interact with the management.
Yes.
So when you meet the management, you need to gain the clarity that what is their vision over the next 3 to 5 years, right? If it is aligning to your interest and your goals, then better be with it to get that 5x to 25x. Then maybe evaluate your portfolio. And if not, then you can take an exit or a partial exit.
Okay.
If your thesis of investing in that company is not the same now, then you can think of investing. Say for example, the same thing. If we made almost 2.5x in a pharma company over the last 2.5 years by investing in when it was 1/3 2.5 years back, so we are still holding it because the plant in South India has just started its operations in September, adding its capacity by 60%. So the management is more optimistic and we feel that the stock will double over the next 2.5, 3 years. So we'll add more given the valuation. So you need to review that particular investment of yours with the thesis of what management of the company is saying, and then maybe once a year you need to review that.
Okay.
So
Yeah.
generally, equity investor, they have two choices. One, either you become Kumbhakarna or you become Arjun. So choice is yours. Either you have to clarity, means if you are a long term, you stay invested like Kumbhakarna and automatic wealth will created. Another option is Arjun, means you want to exit from one part and you invest in another startup. Like way you can also build your wealth.
And a subsequent question to this, does behavioral science change with age, or is there a curve which also transforms as we grow or as we age, because of the risk aversion or because of some experiences or because of information asymmetry, whatever it is?
Right, exactly. By age means theoretically says that your desire to multiply your money will be reduced. So your greed will be reduced. So you have already achieved certain goals. So you will not take more risk in that point. So definitely you will be more conservative.
And is there a way it can be transformed?
Yes, yes.
Okay.
Yeah, so answering your question, it's very much, because the aspirations of a 30-year-old versus a 50-year-old versus a 70-year-old are different. Because for a 70-year-old, they have done most of the things in life, and for them, 5 crores or 50 crores does not matter. For them, the priority in life is much different. Right? For example, Warren Buffett, at the age of 95, he would anticipate and look at an investment very differently than somebody who is 25-year-old. Very simple.
Okay, thank you very much, both the speakers. It was a wonderful session, and we'll close now. But both are here. If anyone wants to separately.